Hello, this is Leland Jepson, and in this video blog, I'm excited to share with you how I plan my personal finances using a budgeting template. This simple tool could change your life by helping you plan and account for your money. So let's go ahead and get started. Here is the budgeting template that we're going to cover today, and this template is also available for download off the website at www.jepfin.com. And this budgeting template is in Excel, but hopefully today's tutorial will be simple enough to make it usable for anybody. And so we're going to go through this together right now. There's three elements of your finances that this puts all in one view, which I like a lot. So we have on the right hand side your revenues. Over here in the middle, we have your spending, particularly column C. You can see the spending numbers and then the budgeting numbers in column B. So spending versus budgeting. And then down at the bottom here, we have your actual account balances. And here we have different accounts. You may have one account. Here I have three tables for three different accounts. This right here is personal checking. If you have a business account, here's a business account or a second checking account. And then this last table is for cash on hand. So three accounts, and we'll show how to do account balances, and then also the budgeted numbers versus spending numbers, and then the revenue numbers. The place where you want to start, and this is broken up by month. You can see at the bottom we have January, February, March, April, and so on and so forth. The place you want to start when planning out your month, and I recommend planning the month before the month starts if possible, but the place you want to start is in your revenues. So here in this example, we have a spouse 1 and a spouse 2. Maybe spouse 1 has multiple jobs or multiple clients, or maybe spouse 1 has just one job. For this example, we have spouse 2 that simply has one revenue stream, but it could be obviously different. So here, spouse 1 goes ahead and estimates what is the baseline or conservative estimate for revenues off job 1, so take-home income. And for job 1, for spouse 1, we have $4,500. Now, spouse 1 may have a higher revenue number he can put down, or she can put down what they shoot for, of 3,000 because of potentially overtime, or actually put down 5,000 would be a higher number. But a baseline conservative number is really important, so 4,500, and then maybe there's some secondary jobs, $300 for job 2, $300 for job 3, maybe not. So if you don't have second jobs or other income streams, then don't bother. But if there are multiple clients or multiple jobs, you can put those down right here. You might want to put down higher estimates over here. So if you think that there could be a chance of greater income, you can put down maybe a higher number here. But it's important to have a baseline for spouse 1 off these revenue streams right here. Down towards the bottom, here is the total for spouse 1's revenues. And then we have spouse 2 right here. Maybe spouse 2 is a teacher, and so income is more consistent, and it's simply $2,500. So there are the incomes for spouse 1 and spouse 2. Now, these numbers that have been projected actually are already linked to the budget over here. So here we have right here, this open column is spouse 1's income. And spouse 1's worst case, or what I call baseline estimate, came out to 5,100. Obviously, we're shooting for higher, but 5,100 was the baseline number. There's some business expenses because spouse 1 is self-employed in this example, and so the net pre-tax net income is $4,100. So taking the conservative number, subtracting business expenses, brings us to 4,100. His if it's a spouse two with a regular income of 2,500, the household income is $6,600. So that's the budgeted revenue for January. So we're not going to consider, even though we're hoping for 6,000 off spouse one, we're not going to calculate that. We're going to use the conservative number to get 6,600. So these are all calculated off the revenue numbers that we did earlier. Down here, we have categories of spending for the household. So here you can see that um, giving in January is estimated, giving or offering is estimated at 150. Um, this household tithes, and so 10% of 6,600 is $660, and there's actually a calculation for that, but you can obviously put that number in differently if you want. Also, they do 10% towards emergency savings. So there's a calculation for that. Obviously, you can put in a different number, but there's $6,600 here for that. This couple uses the 10-10-80 budgeting, which I blogged about earlier in my blog posts. You can read about that off jepfin.com, but you can see that they're giving 10%, they're saving 10%, and they're going to live on 80% or less. Here you can see they have some short-term savings. Maybe they're saving up for a car or a vacation, credit card payments, car payment. So you have different categories and then estimates as to how much will be spent on each of those categories. I can promise you that as you do this month in, month out, you get better and better about estimating the spending for these categories. And so as you go along, you'll become better and better at this. You'll eventually become a master of your budgeting. Down here towards the bottom, we have $200 for blow. That's fun money, basically. But all these numbers are put in hopefully before the month starts. That's the way it works best. If it can't be done before the month starts, then that's okay too, but preferably before the month begins. And it's important, these numbers here are all negative numbers. So you can see total outgo budgeted is 6,220. The total income was 6,600, which makes for a surplus of $380. The previous month's balance was $100 total, so there's a $100 carryover from the previous month, which makes for a cash flow projection of $480. Now, down here, you can see that if there's a surplus, like we're projecting where that surplus would go based off some priorities for surplus. So emergency savings, for example, they're hoping to have 5,000 in the emergency savings by October. Credit card payments be zero by December. So if there's a surplus, you can see these goals are where that surplus would go. You can put in your own goals, but these are just some examples of where a surplus would go. This can be updated as the year progresses. Down here we have the account. So again, this opening table, this table right here, is the personal checking account. So right here we have personal checking. If you have a second account or a business checking account, that could be this one. And then this last column is for cash on hand. Now maybe you only use one account. Maybe you use all three. Yeah, you can configure this however works best for you. But here on the personal checking account, there's a carryover from the previous month of $5,000. That's where we're starting. That's the beginning balance, $5,000. Now, as the month goes along, you can input your transactions off of your statement from your bank, or what I like to do is to log into my account and input transactions right off my bank website. So here on January 1st, 2014, I go ahead and put the date and then the recipient. So personal checking recipient, let's just say this is Trader Joe's. If I can spell Trader Joe's. And the category is going to be food. And the transaction amount, let's say $200. So minus $200, and boom, I hit return. Now I have reduced my balance to 4,800. And let's say back on January 3rd, I go back to Trader Joe's. So I'm just inputting what's off my checking, and I spent another $100. So I'm really liking Trader Joe's in January so far. So you're just going to put in your transactions. Maybe you went to um, Regal Theater for a night out. That definitely would be what I'd call blow. You spent 20 bucks at the movies. Nice date. Oops, let me go ahead and correct that. That should be January 5th, 2014. So I'm just basically correlating with my personal checking account statement by putting these categories in and these transactions. Let me put a few more in. January 7th, 2014. Kaiser, and I can put down, this is my medical insurance, which is 500 bucks. So I put in my transactions. I'll put one more in. Let's call this next one, oh, Amica Auto Insurance. That's the category is auto insurance. I call it auto insurance and maintenance, and I spent 100 bucks there. So there are my beginning transactions off my personal checking account for the month of January. Now, if, for example, I had to hit the ATM, I needed some cash on hand, let's say January 10th, I hit the ATM, so I put ATM here as the recipient or the contact I was interacting with. The category is going to be unique. It's not going to be a category off the budget. It's going to be called a balance transfer, and this is going to be -100, and that $100 goes over to my cash table. So January 10th, 2014, I have a ATM, and now I have 100. Oops, wrong. This opening line you want to leave blank because that's where your opening statement, your opening balance goes. So here I have cash, and the category is a balance transfer, and it's $100 positive. Now I have $120 on hand. So this is how I make a balance transfer. In the business checking, let's say January 1st, 2014, I had a job, let's say job one. If I'm self-employed and I have a direct deposit from job one, or job one pays into a business checking account, I now have, oh, excuse me, this is a job one, and this is payment, okay, and this is, let's say, $1,000. So now my business checking just grew by $1,000. On January 10th, 2014, let's say job one pays me again, call this payment, and this is $500. So now I can see my balance is growing. So this is how I input these. I can keep track as to my account balances. Now when it comes time to measure my spending against what actually is going on in my account, I go into, here I have my spending, and actually that should be an equal sign. Here you can see that I go to food, for example, click behind the equal sign, come down and click on the amount I spent on food, which is $200, click add, and here adding the other $100, click return. So you can see I spent $300 so far in January on food. I have $600 budgeted. I have $300 left that I can spend on food. Also down here you can see I also spent, looks like $20 on blow. So I go to the blow category, click behind the equal sign, scroll down and click blow. So I've budgeted $200 for blow. I've spent 20. I have 180 left. And then I had medical insurance. I go to my medical insurance category, health insurance. Click behind the equal sign and click, and there I have $500 on my health insurance. So this is how I am able to keep track. And then the last one was auto insurance. Let's go back to auto insurance, and I can see that auto maintenance and insurance is there. I click behind the equal sign, click on the transaction, click return, and there's $100 on my auto maintenance and insurance, which is $50 less than expected, which is great. So as the month goes on, I do this on a weekly basis, and I can see how I'm doing in terms of my spending versus my projected. So far in the month of January, the income is 1,500, the spending is 920. There's a positive income for the month of 580, and the previous month ending balance was $100, and so there's a cash flow of 680. So that's how that works. Now on the business checking account, we have $1,000 and $500 and job one, job two. So over here you can simply put in the actual numbers. Actually, we got job one, job two. So I'll take that number out. And then the actual date those came in. Job one came in, looks like the 1st, and job two, 500 on the 2nd, or it looks like the 10th, actual date on the 10th. So this is the actual date as when they happened. And you can see that we have so far a total of $1,500. So that's just what's come in so far this month. So on the budget, you can see $1,500 is what's come in, and then what's been spent has been a total outgo of 920. So again, the positive cash flow is 580 plus 100 is 680. Now, as you do this every single month, you'll get better and better at this. At the end of the year, in the summary category, you'll be able to get the totals of everything you've made and everything you've spent, which could be very, very helpful. And you can do each of these for the month and get your total at the very end of the year. So there's a sample at the very beginning. So if you get confused, you can take a look at the sample. Here in this sample, we have someone that has many different clients, for example, or maybe like in January you had just several jobs. So I hope this has been helpful. I would appreciate any feedback. You can email me at leland@jepfin.com. And it's been a pleasure speaking to you. Look forward to talking to you the next time. Bye-bye.